Welcome back to the channel, guys. On today's video, I want to talk about a stock that's been on my watch list for a while, one that I've been watching honestly fall from grace for the last little bit. It's a company you've heard of. We want to talk about Intel today, guys. It is a great chip maker that used to be the darling of the tech boom, and now it's just been falling for years. However, I do feel that this company provides a tremendous value, and we're going to quickly look at why. Intel Corporation trades under the ticker INTC on the NASDAQ. Its current price is $45.67, which happens to be a great entry point in my opinion. We'll go over that in a little bit. Now, the forward dividend yield is a whopping 3.11%, and I say whopping because it has room to grow. So if you invest today, in my opinion, in 5-10 years, this thing is going to be really big, and that's going to be really exciting for your passive income section of your portfolio. Earlier in the video, I mentioned that this thing really fell from grace, and I'm going to just illustrate why here. If you look at the tech boom in the 2000s here, you'll see that this bad boy was trading for $74 per share and has never recovered since then. So if you bought around that time, you are just a miserable shareholder. I mean, at that point in time, the value in this company was a lot of hype because they did not have the revenue that they do today. And I mean, you can see the price isn't even close to what it used to be. The entry price on a stock like this really matters. You want to have a good entry point, a good price to earnings. That's why I'm illustrating this company today. This is why it's been on my watch list and I haven't executed. I've been waiting in the bushes for a great time to strike, and we're about at that time right now. I just want to talk about the dividend for a second here. Like I said, it's paying 3.11% currently, but the payout ratio is what gets me excited. If you take a look at the payout ratio, it's only 28%. This is the reason that I'm saying that this thing is going to be a huge dividend payer in the future. This is a low payout ratio for a company that is growing. So, you know, hold this one in your portfolio, tuck it away, and you're going to be really surprised in the future at how much yield you're going to get on this bad boy. Up on the screen here, we have the total revenue from 2018 all the way up to present day, and what you'll notice is that it's ever increasing. It goes up every year without fail, and even though there was a pandemic, there was no pandemic for this company because chips are always in demand. Intel is a quality, well-known chip maker, and you know what? There's not going to be less and less chips going forward. More things will require the chips that Intel makes. I'm just going to give you a quick example. 10 years ago, we didn't have computer chips in watches, right? Now almost everybody has a smartwatch. It does a million things. You're going to need smaller and faster and lighter chips, and this is what Intel does. This is what they do so very well. You'll see at the bottom here that the basic earnings per share is going up. One side note is that if you look at the average share count, they are aggressively purchasing back shares, and this is causing the earnings per share to go up. But, this aggressive buyback of shares is what I want to see. This is a great way to add value to shareholders. Like I said, as long as you didn't buy this company in 2000 and sat on it until now, there is amazing value to be had from Intel. Something of note is the price to earnings ratio. You'll see here that the price to earning is under 10, 9.4 for a world-class chip maker. That seems like it's way too low, right? Well, there's a couple of reasons for it. This company has been out of favor for a long time. People are really flocking to other chip makers such as AMD and Taiwan semiconductor people, but that's fine. This company is an absolute beast, and you'll notice that if you look at an important metric like free cash flow. Now you'll see that it's going up, but there was a dip in 2021. Part of this is due to expansion into new products, which is something that I do get excited about. Another company that's popular with these chips is NVIDIA. Everybody knows they're one of the greatest graphic card makers on the market, but Intel is making a chip to compete with them, and that's got me a little bit exciting because it offers them a new revenue stream. Intel has always had onboard graphic processors that honestly they weren't that good. They were bad. To be honest, they were bad. But now they're entering the high-end consumer high-performance graphic card space, and this is exciting. Intel Arc Graphics. This is going to be a huge driver of revenue going forward. This is what people like. Look at the price to earnings on NVIDIA stock and ask yourself why. What are they doing that Intel can't do? nothing is the answer. Intel has a ton of money. They spent a lot of money researching and just in R&D for these chips, and this is going to really provide a great return for us as shareholders going forward. In addition to this, Intel is going to be investing $20 billion in making a computer chip factory in Ohio, and it might just be the world's largest. You know, up until now, a lot of chips are coming from China, they're coming from overseas, and Intel is going to be changing that. They're going to be making and investing and creating in America. You know, as a North American, I like that. I like that these chips are being made close to home, and I know they're going to be great quality. Now, this factory is going to take a humongous investment. So that's going to be shown on the balance sheet. Money is going to be going out, but you know, once this thing is completed, this is really gonna make a lot of money for them. And you know, people like to buy American, especially American. So this is going to be a good catalyst, and this is going to be self-reliance. Okay, you don't need to look at other countries. You can rely on America. You can rely on North America for great products. Taiwanese semiconductor manufacturer and Samsung, they're going to be in trouble because America is going to be purchasing chips from America. This is good. This is just good overall from a company standpoint, from an investor standpoint. I like it, and this is why Intel is on my watch list. As soon as I get a little bit more money, I'm going to be purchasing this. I hope you guys enjoyed my quick stock analysis on Intel. It's been a dog recently, but I think this one's going to be biting back. It's got room to grow in the future. So I'm waiting for my dividends from my Canadian banks to come in, and I'm going to roll it right into Intel as long as the stock doesn't have a huge run up from now till the end of the month. Anyways, guys, let me know if you hate this stock. A lot of people do, honestly. I just think it has tremendous room to grow in the future. Yeah, so leave your comments down below. We'll see you in the next video. Thanks so much for watching.